Good morning. You're watching The Market right here on ET Now with me, Asha Faridi, Aman Dabash, Nikunj Dalmia at the studios, and 21K already here. Seems like the next pin code is going to be a fresh all-time high.
Yeah, I'm not surprised, but it's very heartening to see that the trend what we saw in a sense for the market actually has turned out to be a reality. What really has helped the market? Global cues, largely, decline in dollar index, crack in oil, and the fact that globally the mood point I think is risk on. So are we in for the best expiry of 2023? Remember, 2023 has not been a very good or a grand year for the market per se. The answer to that, well, maybe yes. What's heartening in my book is to see three things. One, FIs have been net buyers for 5 days on the trot now. And at higher level, there is strong follow buying, which is what you want to see. And I'm talking about large cap stocks. So at higher levels, earlier, the market in a sense saw profit booking. But right now, once you've crossed those key technical levels, FIs are back, and higher levels, there is FI buying. So are we on course to scale higher? The answer to that may well be yes. Could we make a new high on the Nifty before the year ends? That possibility cannot be ruled out. What looked like a very tough trek now looks like it is just a kissing distance away.
Yeah, and the last time Nifty was at 20K levels, which is in September, and the market construct where crude was, where dollar index was, things were a lot different. So seems like, all things are pointing towards a stronger base case for us to make a dash to that 21K mark.
So you got 1 quarter of earnings.
Yeah.
That automatically will make market look cheaper. Then you had this, mid-air turbulence, if I may use the word, because of global geopolitical concerns. That has got digested, and you've seen a decisive move in global risk appetite back to the market in terms of where the emerging market appetite is. So the lay of the land is that while small and mid-cap stocks, they will do their bit, the real rara action is in the IPO market. But I guess now, वो कहते हैं ना समय आ गया है. I think now for large cap stocks and banks, I think they could be the dominant theme for next couple of days.
Oh, yes, indeed. And take a look as to how we've performed for this series alone. 6.5% on the Nifty, with the Nifty Bank up 5.4%. But yes, Nikunj, as you said, rara, and it's going to be nothing short of that when it comes to the primary markets, because today is a critical day. You've got the listing for Tata Tech that is expected. And guess what? We're expecting even a 4-digit listing of 1,000 rupees a piece for Tata Tech, and a bumper listing, nothing short of that, for Iradia as well. So clearly it is going to be a pretty healthy day for both these bumper listings.
No, Iradia got listed yesterday. We'll talk about it. But Tata Tech is where, let's start with it, because line
55% premium, apologies, yeah.
87%, I don't know why
87, yeah.
No, by the time it closed, it listed at a 55%
yeah.
premium and then went on to.
We'll talk about it,
Yeah.
it's all right. Okay, Tata Tech. Now, look at the grey market premium. So what the offer price was, that really becomes irrelevant. Now let's look at two scenarios. If you look at the grey market premium, we are looking at a listing anywhere between, closer to about 900 rupees. At 950 rupees, it will be trading at a P multiple of 53 times. If it's a 100% listing, considering that there is an underlying, vibe and a strong current, and being a Tata Group company, and after yesterday's IRDA experience, everybody would like to, rush for it. So let's say it makes a debut at 100% premium. If it makes a premium at debut at 100% premium, the market cap would be 40,000 crore, and the P multiple would be about 55 times. At 55 times, what are the comparables? Well, at 55 times, you compare IRDA with other tech companies, and you would say that it's reasonably priced. So at Tata Tech, after 100% premium, you compare that with KPIT and other peers. Not too many peers are there, but you would say that Tata Tech actually would be fairly priced. So rather than chasing the stock on the listing, and if the listing is more than 100% premium, it may not be a great idea. If you own the stock, you got lucky in the allocation, please don't sell. But the margin of safety in the near term, if you're buying a stock, an IT company, even though it's a Tata company, after 100% pop-up may not be the best of the idea. You want to be a buyer in Tata Tech, but when there is a decline or when there is a profit booking in the market, the stock will occupy all the limelight. It will be like the talk of the town. Everybody is excited. Everybody wants to know more. There is this fly in the ointment, so to speak, about them running into some rough weather with a client that may just take the niche away. But my limited point is, you have to be very clear in what you're chasing. To chase momentum in Tata Tech after 100% listing, after 100% gain, may not be a great idea. To sell the stock even after 100% listing is also not a good idea. So then what do? Just wait if you don't have the shares.
Just sit it out, and like you said, as opposed to the peers, on an FY24 PE basis, it's a lot cheaper. In fact, the cheapest of its listed peers entity, look at L&T Technologies, that's trailing at about 36 times, KPIT Tech 67, and Tata Elxsi 63 times. So it's the cheapest of the lot in that sense.
This is offer price, right? I mean, the listing is not
on
going
the
to be
offer
there.
Price, yes.
Now, you assume it's going to be 100% premium, which is what it indicates. Then the word cheap is not there. I mean, then it just changes. So, do you really want to chase the stock? See, you want to chase the stock if you get it at the offer price.
Yeah.
You will not get at the offer price. You will get 100% premium. Then what do you do is the question.
Yeah. And we will be sure to ask that very question to all of our experts as well who are joining in today. And of course, we'll be live at the stock exchanges as well, covering the opening ceremony. Remember, it's the first from the Tata stable in about 18 years. So in the last 2 decades, you haven't had any offering from the Tata Group, and this is surely something that we're going to be catching out for. But not what's next for the market, like we've been talking about, the dollar has seen a bit of a recovery overnight. You've got 5 state election exit polls as well to look out for. Today, you've got the Q2 GDP data as well. And then, of course, come tomorrow, you'll have the November auto dispatch figures as well. So in that sense, a lot of these very near-term triggers that the market has to work with.
See, today is the outcome for exit polls. And if markets like what the exit polls have to indicate, I think we'll make a new high tomorrow. If markets don't like what the outcome of the exit polls is, you could be pushed back. And then a new high will have to wait it out for some more time. So I don't think from a market standpoint, this is something which is going to be a swing event. But because of the positioning of the market is such right now, really in terms of connecting the dots, a push towards a new high based on the exit poll outcome, I think is something which cannot be ruled out. If markets don't like the outcome of the exit polls, will we see a complete crackdown and will we go back to levels of 19,500, 19,600? I doubt it very much, because the markets are not going up in anticipation of any state election poll. The bulls just need that last trigger for markets to go higher, which may come because of election polls, but that's not the only trigger where markets have gone higher. So if markets have only gone higher in anticipation of strong outcome for the current administration or for the Modi government, then we would have said the outcome of election polls would have mattered, but this is not central. Yeah. So I don't think from a market standpoint it really matters. If at all, if the outcome is strong, it may push the market to a new high. The damage, I think, will not be more than 2-3%, 200-300 points.
Yeah, absolutely. And the worst, as many experts have been saying, seems already in the price. If there's anything positive, that, like Nikun said, could only act as a leg up for the next trigger for the markets. But let me take it across to Vinny, find out what the global commentary as well has been overnight. Vinny?
Good morning, and yes, talking about those important global commentaries, let's first talk about Fed's beige book, which has come in and which is highlighting in terms of the acknowledgement of a slowing economy, and that is what Peter Schiff is actually commenting on. He said that this acknowledgement that is coming in from the Fed's beige book in terms of the slowing economy, that's why we saw the bonds rallying as well. And bond investors, he highlights, should be actually very careful of what they are wishing for, because the economy is weaker than what the Fed is expecting and thinks it is, and the results will be larger in terms of budget deficit that one could see, and higher inflation obviously being a concern, and that's bearish for the bonds as well. Other than that, let's talk about commentary that we have coming in from Fed's Bostic, who's saying that there is evidence that is pointing towards the downward path for inflation. Federal Reserve Bank's president of Atlanta furthermore highlights that he's increasingly convinced that this downward trajectory of inflation will probably carry on, and the economic activity will slow in the coming months as well. He sees there's a sense of greater clarity that is coming in terms of fewer important currents as well that one could watch out for going forward. And then that Fed's Birkins also is highlighting in terms of that, obviously another rate hike. Yes, that's still a possibility, and that is not off the table as of now as well. Market and Fed have been forecasting in terms of the battle and inflation. Yes, surely it's coming down, but it's coming down stubbornly, so one to watch out for. Lastly, we have commentary that is coming in from agencies by JP Morgan Chase CEO Jamie Dimon in terms of, he's issuing a warning in terms of a warning for the Wall Street that there could be a recession, and furthermore inflation also could see a rise coming in. So these possibilities are still not off the table as well, and a lot of things that are out there that could be dangerous, and inflationary trends could still continue going forward as well. He's cautious on the economy, and that's the word coming in from him.
Right, Jamie Dimon says a lot of things out there are dangerous and inflationary, so be prepared. Thanks very much, Vinny, for giving us that roundup. But let's focus our markets and find out what levels we're tracking. Naresh Mirani, Kunal Bothra here to discuss just that. And great going for the equity markets. Next destination, 21K. And what's your sense on expiry, Kunal? We're set for the best expiry of the year.
Yeah, seems like, and I think it's been a good market so far over the last 1.5 odd month. We managed to build up, from that 18,800 odd levels mid of October, in the second half of October, towards a point where the markets remained a lot more stagnant at the 19,800 mark. So I think there was a point where almost for a week, the indices were trading at this 19,800, 600 band. For itself. But then even this kind of a market, in that kind of a market, you had the mid caps and small caps which are outperforming. Yesterday we saw the large caps making a strong comeback, the Nifty decisively breaking past about the 20,000 mark, in fact coming close to the 20,100 levels as well. So I think the overall setup is quite attractive. The good part about the derivatives data, which we've seen over the last 2 days, is not just a slew of short covering has started, but even long formations have been started to get carried forward for the next series. So, for example, yesterday there was unwinding of almost 42,000 contracts on the current month futures, that's November series, and a built up of almost 54,000 on the next month series. So that means a net addition of almost 12,000, 11,000 contracts for the next series. That generally indicates that it's not just a slew of short covering, but it's a confidence building which is happening to the markets.
All right, confidence building in the markets. And Naresh, the fact that we've seen the Nifty Bank as well rally over 1,000 points over the last 4 days, what is that indicative of? What levels are you tracking on the bank index?
So on the Bank Nifty, we've finally given the short-term breakout. And this breakout would ideally imply a test of 45,500 levels on the upside in the minimum case. So overall, the structure is set, wherein the banks now become a buy on dips. And we are seeing a recovery in the heavyweights. So we've seen HDFC Bank yesterday was the largest contributor to the Bank Nifty as well as to the Nifty. So HDFC Bank is almost at a 1 month high at around 1550, 1560 levels. Kotak Mahindra Bank is making a comeback. Axis Bank has hit a new all-time high. So clearly one leadership stock has come up. The second one is ICICI Bank, which has also made a recovery. If that also sustains about 950, 960, that would be a confirmation on all the major heavyweights on the banking space. So overall, expecting this move to continue on the banking space, and we could see leadership coming in the banks.
Right, okay, let's talk stocks then on that note, considering it was Axis as well as HDFC Bank which pushed up higher. But Kunal, what are you betting on?
So yeah, betting on Axis Bank as the first pick, would suggest a buy even at current terms of 1,060 plus levels for the stock to a target of 1110. Stop loss could be kept at 1,040. And Aarti Industries has also been one of the stocks which have been highlighting over the last few days. That's also looking attractive. In fact, yesterday the stock confirmed a breakout of a weekly double bottom pattern. So that could probably implicate that the stock may start to get into a much more stronger trending mode on the weekly as well as on the monthly chart. So that's a buy, 600 as a target. Stop loss trail to 535.
All right, Naresh, let's find out what makes it to your list this Thursday morning.
So first is again a buy on Axis Bank. The stock has given a breakout, the first one to make a new all-time high. And also the stock did not correct as much as the rest of the banking space did. So clearly the leader has been established in the banking space. A short-term target price of 1150, stop loss at 1020. Second is a buy on LIC Housing Finance. The stock had made 2-3 tops around 480 in the last 3 months and made a base around 440, 450. Yesterday was a strong move. The stock has tested the 480 mark, closed a bit lower, but expecting a breakout move going forward. And the stock has been a relatively underperformer in the whole NBFC space as such. So expecting a move towards 520 levels in the short term, stop loss at 460.
You have it, top trading calls to go down with this morning. But let's move right on then. And Anisha joins us in our studios to discuss some stocks and interesting reports as well that have come out. And Anisha, let's begin with the downgrade that we've got from Jefferies this time around. What exactly are they flagging off? And this is coming in after the recent downgrade as well that we saw from Societe Generale, I think. Yeah.
Correct. So yesterday there was downgrade coming in, and this is coming after those slew of upgrades that we have seen over the last couple of months. So maybe after the run-up, everybody is getting a bit more, jittery about the kind of rapid move that we have seen in the month of November, because the index is up almost 5% in this month itself. Having said that, we are very close to the record high level. They have tactically downgraded the rating on India, that's Jefferies, to neutral from overweight earlier. They're saying that given there's going to be a lot more focus on value in 2024, they're tactically downgrading India to a neutral. MSCI India has actually managed to outperform its EMs, other regions 3 years in a row. While structural story remains very strong, nobody can take away the fact that the valuations are very expensive when it comes to India right now. There's also that overhang of political risk, because next year, of course, it's going to be election heavy. Seasonality might kick in at the start of the year. There could be a bit of flow move from India to China or to China itself, just that. So all of this means that it's not going to be a runaway rally in the next 6 months, and that's why they have tactically downgraded it, Nikunj.
So Anisha, a tactical downgrade does not mean that the bull market in India is over. Brokerages have their own view, which is perhaps based on price, flows, relative understanding, and the understanding of the risk. Now, our market's cheap by any stretch of imagination. Sliver of the market is cheap. Our markets, are these the best levels where you want to buy? The answer to that may well be a big and no. But my point is that what is the construct we are looking at? If we are looking at volatility coming in the run up to the election, the answer to that is well, yes. But if you can digest the volatility, you have two options. Prepare your portfolio for a 15-20% volatility, maybe a greater swing in mid and small cap stocks. But if markets like the election verdict, then we are looking at markets significantly going higher. So the choice what you have is the following, that can you digest a 15-20% volatility, then you should be in the market. But if you want to digest no volatility and come back post the election verdict and buy markets 15-20% higher, so that's a call you have to take. So it really depends on your risk appetite and the comfort. One shoe does not fit all. So a standard view that you should lighten up your portfolio at these levels may well apply for institutional investors. It may not well apply for a lot of our viewers who are watching the show, because once you sell the stock, you have to time it the entry back. There are different tax complications, and that's why I always say that when you are invested in good stocks and when you see a 2-3 year visibility, there's just no point in selling it.
Okay, fair enough. That's the overall view coming in from the Jefferies note. But meantime, let's also focus in on LIC's new product. Anisha, they plan to launch new non-par saving products. What exactly do brokerages have to say?
Yeah, so this is a story that actually my colleague Anurag broke, that this product is going to be launched, an important one that the street was watching out for. And yesterday, LIC did confirm and talked about how they are launching this particular product. However, given the kind of euphoria that we are seeing around it, Macquarie has come out with a note saying that perhaps it's not that efficient and that lucrative. It's more of a marketing ploy, because if you look at that offering 10% guaranteed return, it's a different way of calculation that they've actually undertaken to get into that 10% guaranteed return. The IRR is reported on a sum assured basis, and if you look at it on a net to net basis, HDFC Life's product is more attractive than LIC, and that table will come up for you on the screen as to how they have done the calculation, how if you do it the normal way, what kind of differentiation comes up. As a result of this, what Macquarie believes, there's not going to be a major negative impact on the private players as such. So we are not going to see a rush into LIC versus the other products of the private companies. But overall, Nikunj, this entire sector has seen quite a bit bit of interest after that RBI circular had come into place. But while rest of the private companies have moved, LIC still hasn't moved that much.
See, LIC is one of those stocks where right now the appetite by institutional investors is very low and limited. It was a value stock when it got listed, and it's been a value stock. Markets typically are not really very happy with the rate of the change what's happening in LIC. So I think LIC is going through its own testing and trying times in terms of regaining the attention of the market. Insurance as a category, while the growth is there, the market share dynamics are extremely different than what they were. The entire tax implications and the policy implications, tax benefits which the sector was enjoying over the years, that also has faded away. LIC has not done anything special in terms of gaining significant market share or going up in terms of regaining anything substantial. So could this product be a differentiating product for LIC going forward? Well, the brokerages feel that it is pretty much old wine in the same bottle, and other insurance companies have a better proposition. So let's see what the acceptability of the product here is. Sometimes it's not only about like-to-like comparison. Sometimes it's also about the ability to scale up a product. For example, HDFC Bank does not give you the best CASA, but it still gets about 20% of the fixed deposits. The smaller banks, they give you a higher rate of return. Corporate banks, they give you, mercantile banks, they give you a higher rate of return, but they don't that kind of an CASA because of size, reach and branch. So I will not just shrug off this new product from LIC because HDFC Life product and other products are better. I think for LIC, the reach advantage would be there, but if they're able to scale it up, I guess the benefit of that really would be visible going forward.
All right. Thanks very much, Anisha, for joining in, and Nikunj for giving us that take on these individual notes. Let's slip into a very short break. Be right back as we connect with Sanjeev Kapoor as well as tell you all the stocks in news.
Back with the market right here in ET now, already scaled to that 20,000 mark. In fact, we clocked even 20,100 intraday in trade today. In trade yesterday and settled just a tad below that level. So seems like 21K pretty much in sight. Let's welcome on board Sanjeev Kapoor. Sanjeev, hi, morning. 20,100 here, not just 20,000. What's next in store? And more importantly, what are the stocks you think are going to lead the market rally forward from here?
Yeah, good morning, Aisha. So I know everyone is just startled at how fast the recovery happened, but it was there. It was for the asking. Lower yields, lower weakness in US dollar, strength in the US markets, all that meant that the pessimism in end of October was more to do with technical in nature. I think results have been fairly fine. India is under-owned at the lowest, in 16 years by FIs, and that is what is going to drive, the prices higher. So I am very, very optimistic. The broader market will continue to outperform. New highs are very much on the cards. You have the, provincial, exit poll and the Monday outlook. But I think all that will be taken with a pinch of salt because the general elections are very, very far. So there will be volatility, but I am of the opinion earnings, macros, and the Fed attitude now not higher for longer, but maybe a rate cut coming in the first quarter could actually set the cat amongst the pigeons. So very, very optimistic, particularly on banks which have underperformed and select stocks which can be outperformers in the PSU and in the consumption basket.
Sanjeev, hi, morning. Iradia, and it was a stellar listing yesterday. What's the outlook now? Hold, book profits, or do you think even buying more now?
Well, hold 100%. Book profit is it depends on your the duration, Aman, because they are talking of 30% CAGR, and we know that space in renewables and green energy, cost of money is the lowest. So I think they will do very well as a company. It's now got a Navratna status and so on, and they are the flavor of the day, month, and the year. That is PSUs, particularly PSU power lenders. So I am very, very optimistic. We picked it up yesterday for some clients who could not get that much in the initial allotment. And we are not in a hurry to sell. We will play out this over the next 2 years. Like I said, the initial pop and the returns have been startling. That is what you'll expect today again in Tata Tech. But I would still say use any dips on decline to buy this IREDA.
But Sanjeev, the problem is that dip won't come, and many have been left just, rubbing their hands because they never got subscription. So, I mean, what do you think is good value to buy in case you've already missed out on the IPO opportunity? Because the stock is not going to abate anytime soon.
So Aisha, that will always be a question, a glass half full, half empty. Do I get in? Do I not? What I would suggest is do a sip for the next 6 months. Buy some now, buy some on declines, and keep buying every month. Depends on your duration as an investor. What is your horizon? The short-term traders will have made a killing, but the longer-term play is still to be invested in power lenders because they've never had it so good. I mean, who thought REC PFC will be 4 times from the last 2 years? It's all about holding quality stocks where the underlying fundamentals are changing very, very rapidly. And I still think PSUs are in a sweet spot. So, like I said, use any opportunity to buy some and then wait for declines or do a sip for the next 3, 4, 5 months. You will get volatility where there will be providential correction. That would be a good point to add on.
Okay, fair enough. What's the outlook when it comes to the auto sector now on the back of the upcoming November auto sales numbers? Do you think that the festive cheer will play out? What's the outlook in terms of the demand momentum across the board?
So, Aman, it is evident in the stock prices. If you saw Bajaj Auto, Hero, and Eicher all hitting all-time highs, and it's a classic reversal in the last 6 months where rural incomes were supposed to be down and out, and two-wheelers were bearing the brunt. But two-wheelers have made such a smart comeback, and not to forget the CV players like Tata Motor, also on the back of the Tata Tech listing, Ashok Leyland, Maruti, all of them are doing extremely well. So I think this season is such, when you have 32 lakh weddings and 4.5 lakh crore expenditure, then cars, autos, two-wheelers, depending on one's budget, will definitely find its way into each household. I still think there is more upside. It's first time that I've seen the pessimism which rubbed out on Eicher was actually a buying opportunity when they, when Hero launched Harley Davidson and Bajaj Triumph. But Eicher has made a very strong comeback, and there's no running away from the fact that Royal Enfield as a brand is really matured and is there to stay. So I would definitely put my money on Eicher. I think the upside is now about 20% from here, and you can add a Hero which we own as a disclosure. So both these stocks are in our portfolio, but we would advocate buys. Ashok Leyland is my dark horse play in the CV sector. It has rallied from 165, 170 when I was recommending to 180. I think that stock is headed to 225.
In fact, since we're on the subject of consumption, it's an 18-hour Newsbreak confirmed that footwear brand Foot Locker is all set to enter India with licensed partners Nykaa as well as Metro. They've got their rights to own and operate their stores in India. My colleague Aishwarya Patil spoke with the CEO of Metro Brands, Nissan Joseph, on the deal and the future plans that they have with Foot Locker showrooms in the country.
We've taken two very good players in two different fields. Metro, as you know, is a leader in retail stores, and you've got Nykaa, that's an outstanding e-commerce retailer as well. So when you combine the two, the synergies that the two create is very exciting for us, and I think that was a great move because I think it puts the best foot forward for Foot Locker, which is good for all consumers in India for them to have a great brand come to India.
Now that Foot Locker is a multi-brand retail store, of course, and we'll have an assortment of footwear to choose from as well. Talk to us about the period of this long-term agreement and also what are the terms of the deal between the three of you, if you could break that down for us.
Well, I think like everything we do at Metro Brands has a very long-term perspective. So we look for multi-decade agreements in general, and Foot Locker definitely fits that pattern for us. We also want to make sure that this is a good, symbiotic, and profitable relationship between the three of us. And so we're working very closely with Nykaa on how to make that all happen. There's very little product overlap between what we do at Metro and all our different banners and what we do at Foot Locker, right? So that's the first thing. So it's not cannibalistic in any way. On the contrary, the one brand that we would have some synergies with is our Fila brand. And we see that Foot Locker giving it an opportunity to be an accelerator. Having said that, the product needs to be differentiated because
All right, that's word coming in from Nissan Joseph of Metro Brands. But let's move away from that to the spotlight of the day. Tata Tech, the mammoth IPO of the day, it's expected of the year rather, and it's expected to be a blockbuster debut as it lists on the bourses today. My colleagues Aishwarya Patil as well as Anurag Joshi joining in to give us all the details at right where the action is at the exchanges. And Aishwarya, it's expected to be a bumper listing and nothing short of that.
That's correct. Tata Tech is going to be a main board IPO, and in almost 3 decades, this will be one of the first among the Tata Group, other subsidiaries of the Tata Group. So the subscription obviously opened on November 22nd, between November 22nd to November 24th, and we saw how it was oversubscribed almost 69 times from the subscription range that they had set, and even in the grey market premium at this point, if you see analysts and investors are bullish on that front. They're expecting it to reach almost 800 to even a 4-digit figure, which is 1,000 rupees is what is expected. And Anurag, tell us more about the Tata Tech IPO. You've been covering it very closely, so little more on that as well.
Yeah, that's correct, Aishwarya. So this has been one of the most interesting IPOs of this year. In fact, Tata Technologies had been planning for this IPO for almost a year, and that's reflected in the subscription and the response the IPO has got, which is about 69 times. So one of the key things this IPO achieves for the Tata Group, the first IPO from the Tata Groups in almost 2 decades. TCS last its shares in 2004. Tata Motors is going to bring down its holding from about 64% to 53% through the IPOs, and there are some other existing investors, including the promoters, who are also offering their shares in the IPO.
Guys, for giving us that roundup. It certainly is going to be very closely tracked. Moving on, let's, Sanjeev, just get in your take then on the Tata Tech IPO, because experts are even saying that on listing day itself, it could touch the 4-digit mark.
Well, Aman, what can we say? The best 2 IPOs, Tatas and the PSUs, at least they've left money on the table for the shareholder, for the, common investor. So very, very positive mood. And I would say that is actually a blessing in disguise, because it will inculcate more of the IPO, participation and so very positive, steps by them. And who's to say, Tata Tech the Tatas have led from the front. They've always created value. You have TCS, you have Tata Elxsi, and you have Tata Com, all very, very big. My top pick over there, if you have not got this, buy Tata Tele, TTML. That is going to be the consumer-facing arm of this of the entire Tata Group as far as ICT goes, and they are making huge inroads. So that is the one which I am actually betting on. As a disclosure, that is in our portfolio in that range of 85-90. We think Tata Tele can double from here in the next 2 years. So Tata Tech is going to have a blockbuster listing. But if you can't digest the volatility and buy the cheaper Tata Tele. That will also make money for you in the next 2 years.
Okay, let's also talk about some of the peers of iRadar, considering that was the big dhamaka one. It listed at a 50% pop, and closed in with an 87% gain, no less, from its debut price. PFC REC, Kunal, on the charts. Do you see continual strength in these 2 names?
Well, yes, the strength continues for these stocks, but the question is that whether we someone looks at a fresh buy at current levels, that could be a bit steep, because the risk reward at current levels may not be very attractive. There are 2 things which could probably ideally happen for these stocks. One is either these stocks may get into a elongated time-wise correction, say for the next couple of months or for the next couple of quarters, if not more, and then the stock may remain a lot more sideways. Or on the other hand, what you may probably expect is that after such kind of steep risk reward where the stock has been divergent significantly from its 200-day moving averages, we expect the stock to get into some kind of a mean reversion in terms of prices. So I think in both of the scenarios, it makes sense to wait out for those phases of opportunities. I think, for example, last week, PFC, REC, they were down some 8%, 7% from their previous swing highs. So an opportunity like that could be a zone to start buying these stocks rather than at the peak of momentum for these names.
Sanjeev, curious to get in your take on Z, given that there's been a lot of flip-flop, rumors perhaps as the Z management is alleging that Sony is going to call off the merger, which they've absolutely refuted. What do you make of the timeline and the way the merger has progressed, and what does this imply for shareholders of Z Entertainment?
Well, frustrating to say the least. We are a part of that, and we are really in a time bound. What do we do? So the merger will create great synergies. There is no question. The presence of Sony will be a blockbuster event, and the sooner rather than later. Now the nitty-gritties have constantly been, and with less than 3% stake, the Goenkas have been holding this company to ransom. The faster we get a resolution and you create wealth for shareholders, that will be the real unbundling. We are extremely positive on the long term, but like I said, Aman, you have to go through the frustrating time of waiting for the final decision and the legal procedures, which are, I think, well on their way over with and are just waiting the final approvals.
Now, this is a very interesting graphic which we've looked at. Is that what's happened to large cap stocks, and which are some of the large cap stocks which are officially in this, hibernation mode. Look at HDFC Bank, 33 mahina. 1, 2, 3, 3 years no return. Kotak Mahindra Bank, 3 years no return. HUL, 3 year no return. TCS, 2 years no return. Reliance, 20 months no return. What has happened to the Nifty in last 2 years and 3 years? Let's look at it. I'm just trying to establish a point here, that how some of the sumo stocks, I like to use the word sumo for them, Reliance, Kotak, HDFC Bank, these are the sumo stocks. And in last 2 years, Nifty has given 18% return, and HDFC Bank, Reliance and Kotak have given no returns. Similarly, look at the small cap index in last 2 years. That's the 3-year return. Imagine how much underperformance HDFC Bank has registered in last 3 years. The small cap index in last 2 years has given you a 30% return. So just imagine if you looked at the small cap stocks and compare that with HDFC Bank. The darling of the stock market, HDFC Bank, actually has given no returns. And these are some other stocks where returns in the NSE 50 actually have been negative. Biocon is an eyesore there. Bandhan Bank, the other one. Jubilant Pharmova. It's a company where Rakesh Jhunwala's trust has a 5% ownership and they still hold on to it. That stock has given no return. Bottom line here is that are large cap stocks now looking cheap, especially private banks? Are they getting ready to cut loose? Vasin Saab.
Agreed, 100%. Nikunj, you've given a very good synopsis, but that's the way markets are. In the last 2 years, mutual funds have also underperformed in delivery of returns because mid caps have stolen the show. And that continues. PSUs are a large constituents of all the mid-cap indices, and all from defense to railways to power, they have been the real jet setters. So I think L&T has been the biggest star, and along with it, there is a whole basket of stocks which have got re-rated from the likes of Dr. Reddy, Cipla, Sun Pharma. These are the ones which have actually made big moves, and rightly so. But I think Bank Nifty is overdone on pessimism. Yesterday, we just saw a trailer of what the under ownership in banks is. And as you know, FI's most ownership is on banks and IT. And now I think they are making a comeback. So I am in the camp that Bank Nifty goes to a new high. And, it will be led by large caps. HDFC, by the way, in the last 2 weeks, it's actually HDFC and Reliance, which I was stressing, will be the ones which will take you past 20,000. So the sheer weight of those two stocks is what is going to move the index. And like you rightly pointed out, the index also has lagged because of these two's underperformance. So I am in the camp that banks make a strong comeback, and the likes of ICICI, Axis, which I've been saying for the last week, 10 days, looks extremely good on the charts. and HDFC will join the party along with Kotak.
Everybody wants to say goodbye to Sanjeev Bhasin. Bhasin Saab, you're so popular that even Avan and me got confused who's supposed to say thank you to you. That's the love which we have for you. Never made a chance to say even hello and goodbye to you. Thank you very much, Bhasin Saab. दिल्ली में ठंड कैसी है Bhasin Saab? Forgot to ask you.
अरे बढ़िया बढ़िया सर, ठंड तो बहुत बढ़िया, और मंदी वालों के तो और ठंड लग रही है. So आप आइए दिल्ली, क्या मौसम है, superb. And actually the best weather, the smog has gone down. There is no restriction on cars moving, and it will be a pleasure to have you here. The best weather available, and new highs are going to welcome the bulls.
Pollution भी तो है. Pollution का क्या करें? AQI 350.
नहीं pollution नहीं है सर. आप आइए तो all cars restrictions is over. It is more hyped by journalists and media. Let it be. It is, for us, it's a daily part of life. We can't change that. Just as stock market was in COVID time, we were actually the COVID warriors. So yes, there is no such big thing. It is just a matter of more attuned, and obviously we stay here. But I'm telling you from ground level, it is much less than what was anticipated.
Naresh Menon is just not reacting. Like, क्या हो रहा है? कौन जाएगा दिल्ली? 350 AQ. I'm very happy in where I live. I get up in the morning, I see a sea-facing view. Right, Naresh?
Yeah, but I have to go for a wedding in Jan, so let's see.
चलो जब तक तो ठीक हो जाएगा. Never mind. Okay, this is a new show, Khane Pe Charcha. I will show you an excerpt of that promo. And this is Sanjeev, the chef. I mean, we've all grown up seeing Sanjeev Kapoor on television, and he shared all recipes. But this time we threw up a different challenge for Sanjeev Kapoor. He was not cooking. He was teaching Team Etina how to cook. That's Sanjeev Kapoor.
So are you ready now to prepare your next lavish meal at home, Nikunj?
A simple assembly of spaghetti and pasta. More like a face saver Avan. He tried very hard to teach me how to cook. But there are certain skills which you try also, you will not be able to imbibe. I tried my level best. I mean, he was kind enough to tell me, and like for example, he told me that you always add your greens, and you never cook your greens. That's a tip I got. So when you are cooking, you never add your greens at the first step. Okay. You always add your greens at the last, because you want the crunchiness to be saved. So yeah, that's a great tip. It was good fun. I mean, I was amazed, Avan, if I look at what he has achieved.
Yeah.
First as a chef. Then as an anchor, I mean television anchor, he's hosted one of the most famous shows.
Yeah, they were iconic.
And then as an entrepreneur, I mean he's got range of businesses where he's endorsing products. He's an investor in one of his companies. He's got P investors. So is it Chef Sanjeev Kapoor? Is it television host Sanjeev Kapoor, or entrepreneur Sanjeev Kapoor? I guess all of them. And that's the show is all about.
Okay, great. Can't wait to watch, and can't wait to sample also your great food.
Chef Nikunj. It gives me great pleasure, and I would say a rare pleasure, to have Mr. Sanjeev Kapoor on Etina.
World has been kind to me, God has been kind to me, and what else can you ask for, right? नहीं तो खाना बनाने वाले को कौन पूछता था?
जो भी चैलेंज है,
बिल्कुल आप मैं सीखूंगा. बिल्कुल, बिल्कुल.
Can I text my wife saying that रात का पास्ता आज मैं बनाऊंगा?
हाँ.
You think एक तो बताएं जी कैसे चल रहा है?
ये जो शेफ है ना होटल का, वो साथ लेके जा रहा है. जो करिए ना. आज से आप इनको बुलाएं शेफ निकुंज.
अब कह सकते हैं ना अपनी खाने की तारीफ नहीं करनी.
मैं कर देता हूँ.
You should put a name to this dish now.
SN cumin spaghetti.
SN cumin spaghetti. देखिए नामकरण भी हो गया.
Khane Pe Charcha, can't wait for that show. Hemang, I'm sure you agree with me. So why don't we talk a little bit about some of these players? Maybe get in your take on QSR, the Zomatos of the world?
Good morning. It's very tempting to talk about Khana right in the morning. I think QSR as a theme, it had a lot of promise, hopes, but I think somewhere in the last, let's say, few months, the growth is not that great. So as a theme, I think it will continue to do well because of the low penetration and the price point at which they're offering products and the valuations, etc. But I think Zomato is completely, a big turnaround story. And I've seen how globally some of the food delivery companies have improved their margins and even their stock price performances have been a good beat, US, China, or other parts of the world. So I think Zomato is something that is still looking good. I think, the entire blocks, as we have seen how it gets absorbed in the market, and the company continues to perform well. So positive view on Zomato.
116 Ant has sold out. I mean, no one's talking about it. But in the same vein, if you talk about the QSR companies or perhaps restaurants here, whether it is Barbecue Nation or whether it is Devyani International, let's look at the YTD change in some of these stocks. That's Barbecue Nation for you. In this year, it's not given any returns. I mean, it's a restaurant. It's a full service restaurant. I mean, they got a change of restaurants. Devyani International, no returns. Through and Westlife, the company which has the franchise, I think for West and for South, the McDonald franchise, it's giving you not great returns, 11%. So it's quite ironical, right, Hemang Bhai? Everybody's ordering on Zomato and the restaurants are cooking, but restaurant stocks are not making money. I mean, it's just been a flat year for most of the QSR companies. It's only Zomato which has done well.
Yeah, it's a bit ironical given that the food delivery companies have done so very well. And at the same time, if you look at the penetration levels or the potential that India offers, it's amazing. I think it's partly to do with the fact that while many people are ordering food, I think the way things have gone in terms of pricing and margins for some of the QSRs, maybe they're going through a bit of a difficult patch. But I think in terms of potential, I would surely think that there's a lot more growth ahead of us. And it's time to kind of look at some of these companies.
QSR stocks, and that is where it is. I'm going to shift gears and talk about IRDA. What a listing. The stock was frozen. Now, middle of the day, suddenly the stock was not trading. Why it was not trading? Well, the listing had happened at a 57% premium, and the maximum a stock can go after that listing, once the benchmark is established, is 20%. And that's what the stock did yesterday. So for IRDA or IREDA, Hemang, what is the way forward now? Yesterday, it was really the showstopper, if I may use the word.
Yeah, absolutely, Nikunj. It's amazing to see the kind of euphoria, the retail participation, the frenzy in the IPO market, and in a way, it's good because it brings a lot of investors, and even the other investors would have some sort of they would have to really look at what's really happening. But one word of caution here, Nikunj, is that typically when you see this kind of an exuberance and when the listing happens at a much higher price than what people would have thought, this kind of a momentum is not great news for people who are looking to buy into the market, having some sort of a missed out feeling. So I would certainly think that let's not get too gung-ho on what's happening in the IPO market. We've seen earlier period when there is so much of euphoria, it does not last too long. So a word of caution here, don't get too carried away. It's time to really focus on the large cap names, the banking names, the ones like you mentioned, some of the companies in the large caps which have not delivered any positive return. I see greater opportunity there rather than chasing some of the IPO names at a much higher levels.
Moving right on, what about Praj Industries? And curious to get in your take here, Hemang, given that the management has spoken about a lot of growth in product diversity, how they aim to triple their revenues by FY30 and reduce dependence on bioenergy. Given the steady trajectory of the stock, what's the view on Praj Industries if you track it?
Sure. The opportunity both in terms of ethanol and the entire ecosystem that Praj has built around it. I think you don't have too many companies. While in the ethanol space, the sugar companies, there can be few names, but when it comes to the core infra and the ecosystem, Braj is the only name. So I think from a theme perspective, that is looking quite attractive. The stock has done well in the last, let's say, couple of years. But given the way things are shaping up in terms of the focus on ethanol, I think it will remain good for some more time.
Nuresh, a stock which we often discuss but markets remain confused is Z. Merger will go through, well, yes, no, I don't know. The management yesterday has come out with a denial saying that, okay, please dismiss all the rumors that the merger is not going through. Let's look at Z this year, Nuresh. It has attracted a lot of headline, but net the stock has given only 4% return.
So the stock has had the most volatility, and every time the stock has gone to 180 to 200 levels, it has bounced back. So that was the price point where the stock was before the whole announcement thing happened. And it went all the way to 380. Post that, for the last 1 year, the range has been very clear, 180, 200 on the downside. On the upside, 280 to 290 has been a tough ask. So this has been the tight range. So once we cross 280, that is the time you start believing that good things are happening. On the lower end, if you want to be looking at a buy, you want it to be a contra buy around 180 to 200. In the middle at 240, 250, there is absolutely no trade. The stock could continue in this sideways period for a long time. So for now, would wait for some price action, a sharper correction or a sharp move on the upside to actually start looking at it again.
Okay. Kunal, there is a little bit of follow buying, or not little bit of follow buying, there's decent follow buying at higher levels on the Nifty. Now, whether it is HDFC Bank or Reliance or a combination of both. But the bottom line here is that unlike previous occasions where we've seen selling, the Nifty has gone above 19,800, 20,000. Now it's the other way around.
Yeah, Nikunjan, I think for that, I think we can probably, thanks the large cap for not participating in the first leg of this 1,000-point recovery from the 18,800 mark to 19,800 levels broadly. So, I think that is one of the major reasons why I would believe that hopefully in the next leg, there could be a lot more positives for the markets where if the large cap stocks start to participate, and even though the market breadth remains a bit more flattish, in terms of the advanced decline, it could probably be a zone where the market's shifting from those mid cap, small caps towards the large cap names. What I also see in terms of a pattern for the index is, typically as you said that at higher levels we generally see long unwinding, we see more profit booking into the stock, into the indices. But this time around, what we've also seen is built up of long formations going into the next series. So I think the rollovers, have already started in a couple of days back, and I think that data suggests that there is formation for the index going forward for the next series. That should also add up for the indices. The third and the most important point, which I think I highlighted yesterday as well, is the slight jump in India VIX from 11.5 to yesterday, I think 12.5, 13 mark for that particular index, which is also helping the case for the index to show momentum on the upside. So, had India VIX, for example, been at 11.5, we would have been seeing a tepid rise of 60 points, 80 points on the Nifty. But because of that slight jump, the ATR, the average to range for the Nifty, shifts from 60, 80 points to almost 150, 200 points.
Okay, meantime, just taking a look at some of the smart movers since the 20th of September. And within the mid-cap universe, you've had names like Prestige Estates, which has jumped up nearly 60%. There's been Power Finance, which has been at the forefront. Fact has actually been one of the stocks that has managed to gain quite smartly. So it's gained about 36%. This is since the month of September. And HPCL. A lot of these PSU stocks, Nuresh, make it to the list, and I know that you've been an advocate of a lot of them, but do you believe that any of the stocks that I have mentioned have the legs to go up further?
So the whole index has surprised, say, from October to November 2020, the CPSE index is up to 20 to 250%. Names like PFC, RECF continued to be in strong momentum. But the sector to watch out for is oil and gas, which is where we've seen a good breakout, a clean trend change in HPCL, BPCL, as well as IOC, and even a ONGC. So this is a sector which one would look out for on dips. Then there is another name called Container Corporation, which has not outperformed in a major way, which has given a breakout. So there are opportunities still there. There is a dredging corporation, BML, where the charts are looking promising. So out here, there is a basket of names which have overdone the move, something like what has happened in defense and railways. But there are new sectors and new stocks propping up in the PSE segment. So I would be watching out for a buy on dips on oil and gas names, and then a container corporation, BML, dredging corp.
Okay, fair enough. And within the frontliners, given the fact that you've had a Hero Moto, Bajaj Auto, Eicher Motors, they've really been at the forefront. Hemang, your take on autos?
I think two-wheeler is where there is a fair bit of action, and recent data points in the festive sales, Hero Motor reported almost about 26% kind of a growth. So I think that is where I would be more comfortable buying into, maybe Hero Motor or Bajaj Auto or Tata Motor. As we all know, apart from the Tata Technology, I think the core business is shaping up pretty well. So I think these are some of the names that I would be more comfortable buying at this point.
Okay. Naresh, anything in the entire rank mid-cap space which looks very interesting? Starting from Suzlon to JP, just about everything in that space has got re-rated.
So there are a lot of smaller names which have break out, which are survivors. So if you look at a Suzlon, it's a survivor. You have a Jaiprakash Associates in the sector which has survived. A lot of these names which were the big winners in 2007, 2010, 12, many of them have gone to zero. So a lot of Landco infras, IVRCL infras are gone. So the survivors could do well. So out here, say a Jaiprakash Power Ventures is an interesting chart. Same way Jaiprakash Associates is an interesting chart, but I would go with Jaiprakash Power on declines. But these are names where you can expect a 20% cut out of nowhere. So one has to be careful. But in the mid-cap space, there are a lot of sectors which are slowly and steadily coming up on radar. So auto and auto ancillaries have been clear winners. So whether you can pick up a Lumax Industries or a Minda Corporation, the names in the auto ancillary pack are doing well. So that's a sector which continues to look interesting, even at current levels. The other one is looking out for say a bottoming out and say a reversal in the agrochemical going forward. So those names could be a contra trade. Housing finance companies are breaking out. So LIC housing in the mid cap space as well as Canfin look interesting.
Let's get some mid cap ideas from Hemang and Kunal. Hemang, from Naresh and from Kunal. Kunal.
So I'll go with Poonawalla Fincorp as a stock to recommend on the upside. I strongly believe that the stock has gone through a sharp phase of correction from that 450 mark to I think 350, 360, where the stock had made a bottom for itself. And I think now it's looking attractive for decent momentum on the upside. So going for a contraband, Poonawalla Fincorp, targets of 430, stop loss to be kept at 363.
Right, Naresh, what's your mid-cap list looking like?
So that's a buy on PVR Inox. The stock has corrected recently from 1850, 1880 all the way down to 1590, 1600 levels. Made a slow recovery, went sideways for the last almost 3 weeks. Yesterday was a breakout of the last 3-week range and could also be a breakout on the falling trend line. Could be a reversal case from here, could go all the way back to 1800 and then towards 1900, 2000 as well. So a risk reward buy here with a stop loss at 1670.
Okay, that's the take coming in on the mid-cap universe. Hemang, great to have you on the show. We'll let you go on that note, counting down to the market open. But Man Infra, that's going to be one stock in focus. And the details of the block yesterday are out and some of the marquee names in there. Anisha is here with that whole list. Anisha?
Oh, well, yes, we did know that MAN Infrastructure is looking at raising around 550 crores. That is something that we did get in the market hours itself, that the company has raised 550 crores. But post market hours, we got the details in terms of which are the marquee buyers that have actually come in, and quite a few names that are there, right from mutual funds to AIFs to individual holders as well. And some names that do deserve a highlight is Vishal Gupta. He's of course, related to the late Rakesh Jhunjhunwala as well. There's Aditya Chandak as well. He's, of course, the son of R.K. Damani. So that's another marquee name coming in to the list of investors as far as Man Infrastructure is concerned. You also have names like Burgess Desai. Quant Mutual Fund has actually come in. Amisha Vora is also one of the names that has been talked about in terms of the investment that the company is seeking. What the company has said for the utilization of the funds is basically they want to tap into the real estate boom that we are seeing right now. They probably you're going to use this fund to acquire more land, construct more buildings, because for now we have seen that for the company as well, there has been a turnaround which has been visible, whether it's the debt profile or the fact that the revenue growth has been very strong. All of this has actually led you to believe that the growth going forward is going to be strong, and of course now a vote of confidence coming in with these kind of marquee investors coming in and backing the company.
Okay, those have been the buyers in Man Infra. Anisha, thanks for that list. In the meantime, let's tell you what else is happening outside the world of markets. And former United States Secretary of State Henry Kissinger, who shaped the country's Cold War history, died at the age of 100. A controversial Nobel Prize winner, Kissinger served under 2 US presidents and left an indelible mark on the foreign policy of the United States of America. Also, the deadline of the extended peace deal between Israel and Hamas is set to expire today, but reports suggest that there are expectations of one more truce extension for at least 2 additional days. US Secretary of State Anthony Blinken has arrived in Tel Aviv in Israel and is set to meet with Israeli leaders to discuss extending the temporary truce and boosting humanitarian aid into the Gaza Strip. Also, the US has accused an Indian citizen of plotting to assassinate Khalistani separatists in New York. Nikhil Gupta, who resides in India, is charged with 2 counts of murder for hire and conspiracy. He was arrested and is awaiting extradition. US said that Gupta allegedly planned to pay an assassin almost $100,000 to carry out the killing. Meanwhile, India has set up a high-level inquiry committee to look into these allegations. And back home, after a high-octane campaign by all parties, voting in Telangana has begun to elect 119 members of the Legislative Assembly. Telangana is witnessing a triangular contest between Congress, BJP and the currently ruling BRS, with over 2,000 contestants in the fray. The voting, or rather counting of votes, is going to be taking place on December 3rd. Also, Google has taken the first step to battle deepfakes. Starting soon, YouTube content creators will need to disclose any altered or synthetic content they post, especially if it is convincingly stimulating someone's face or simulating, I beg your pardon, or voice using AI tools. Google has also invested about $1 million in grants to establish its first responsible AI center at the Madras IIT to combat deepfake risks.